I'm Trumm from Germany. My topic today is the FinTech scene, Germany as a FinTech hub. And everybody knows Germany. We are the fourth biggest economy in the world, one of the most developed countries in the world. We are 82 million people in the heart of Europe, in the heart of the European Union. We are co-number one in global exports in goods and services with China. So China is exporting definitely more units. Germany certainly more value per unit. When it comes to digitization, and particularly to the fintech sector, things are not as developed as one may think about one of the most developed countries in the world. So we have a banking sector that is consisting, of course, of Deutsche Bank, Commerzbank, some of the leading banks in the world, but 50% market share in German retail banking comes from local loans and savings that are run by municipalities, by towns and cities, and by counties as well. They have 50% market share divided by 400 institutions across the country. So that poses huge challenges for them, digitizing, but it's also for any providers of software, of digital products, a huge opportunity because they all need to digitize, so that makes 400 potential customers throughout the country. Germany as a startup sector and also in fintech is very much like India or China. It's a very decentralized market. So it's nothing like the UK or France or other European countries where about 90% of the sector are focused and concentrated in the national capital, like in London or in Paris. It's more like the banking sector is definitely based in Frankfurt, insurance sector in Munich, trading houses, logistics, very much in Hamburg. And Berlin is our national capital city, but it's not the corporate capital, and that's to do with the history of the country. If you're old enough to know, Germany and Berlin were divided during the Cold War times, and East Berlin was a communist capital, not a business hub definitely, and West Berlin was like the hole in a donut in the East German Communist Republic. So it was surrounded by the East German Republic, and certainly not the place to have strategic national assets in place. So today, Germany, Berlin, besides being the national capital with all the government and administration things, is also the startup capital because of its past. It's surprisingly cheap for Western capital. It's much cheaper cost of living than in West German big cities. So that attracted in the early 2000s a lot of young people, a lot of young crowd students. Many of them stuck around and set up startups, which now makes the startup and also fintech scene. It's a bit like, when you compare that, the relationship between Berlin and Frankfurt, it's a bit like Mumbai and maybe Bangalore. The one is more banking expertise and financial sector, the other one more tech. And that's certainly the case in Germany. So the fintech scene in Germany has raised a lot of attention over the past couple of months. So big players in the market are Finleap, the big company builder, that mostly set up, I think, over around about 20-odd startups. Most of them are in B2B. One of them is particularly famous, Solaris Bank. That's a platform that sells banking as a service to non-banks who want to offer banking or payment services to their clients who may be in retail or in logistics or others and don't want to bother obtaining a banking license. That is one good example where fintechs go B2B. B2C, we have certainly N26, just raised a couple $100 million in equity funding, is now worth over $2.5 billion. So one of our big unicorns. They're ahead of Revolut from the UK, and that is explicable in part, in my opinion, in the context of Brexit, because you may know there's a lot of uncertainty and insecurity in the European market. The UK is about to leave the European Union. Nobody knows exactly how, and since I think yesterday, not even exactly when, it was for the past 2 years, everybody said to us it's the 29th of March that they are definitely leaving, but that's a message now that Theresa May has adjusted. Brexit doesn't appear to be meaning Brexit anymore, whatever that is. So all of a sudden, people from outside of Europe are not just looking to London when it comes to financial services in Europe, they are looking also to the biggest market on the European continent, and then that's Germany. That gives more predictability. The big upside is Germany is at the heart of Europe. It's the 4th largest economy in the world, and even post-Brexit, the European Union will be the single biggest domestic market in the world. And that's still 450 million consumers. That's more people than the United States, and still more money for some time than China or India. And the thing is about the European market, why is it a domestic market? It's even more integrated at the moment than the United States or China. You need one banking license, or the same for e-money or a payment institution license in any one of the 28 or in the future potentially just 27 member countries, and you can serve all the consumers throughout the European Union. And that gives a lot of advantages. So you can have a BaFin license in Germany and then serve consumers throughout the European Union, but you can also do business in Germany with a license from Luxembourg or from Dublin, which may be more advantageous if you want to keep regulation at a more digestible level. So what are the opportunities in FinTech in collaboration between Germany and Asia? And that is to do with the market. As I mentioned, most FinTechs in Germany go B2B because German consumers have a kind of difficult reputation. It's a developed country, it's an aging country. Fertility rate is 1.2 children per woman. That's one of the lowest rates in the world. I think only Japan and Singapore come close to that. That gives you a flavor of how conservative the country is. 70% of payment transactions are still cash-based. We do have a lot of, in my opinion, a lot of quality FinTech solutions, but they are more quality from an engineering standpoint, not so much from a standpoint of what is reaching out to the consumers. And that creates a lot of opportunity. When you look at China at the front end, where you have these platforms like WeChat, or to a lesser degree Alibaba and Alipay, where you have integrated platforms, seamless consumer experience, that really gives an extra value to consumers. And in my opinion, consumers don't care about in the West about just another banking act. And when particularly Indian colleagues are asking me what are the pain points of German consumers, well, pain is a very subjective feeling. So there's, from a professional standpoint, there's huge room for improvement on the digitization front, but I doubt that many German consumers feel pain. They are pretty content with what they've got. But that doesn't mean you can't crack the market by offering something that is reaching out to what people actually care for. And what do people care for? They want to communicate with their peers. They want to consume. They want to show off on the social media. And that all means you must integrate to where consumers hang around. Social media, messaging services, e-commerce platforms, and then make lives easier and make it cool or sexy to be using your product. And that is something, as I mentioned, we are an engineering nation. What we're exporting is manufactured, tangible goods. We are not so necessarily good at being cool or sexy. And that's where I see Asian markets coming into the game. It's something what we envisage. Of course, we look to China, the biggest country here in the region. WeChat, that's for me, that's really making lives easier. That's really cool. That's where you want to hang around. But in my opinion, that doesn't work in Germany or in any Western markets, because we do have regulation, we do have data protection, we have GDPR, you may have heard of, and what they do in China, you would end up in jail in my country. So that is, I think, where India comes into play, because you're a democracy, you have the same topics you're discussing, you also have the same setbacks when it comes to Aadhaar and the Supreme Court decision last year. That is something I think we can relate to. By the same token, you do have developed technologies and build up learning curves in certain key areas that offer a seamless and frictionless consumer experience. And for me, that starts with identity management based on the Aadhaar system, based on APIs. That's last year I was here at Fintegrate Zone, and the young colleagues showed me how she transferred money via WhatsApp. That was a year ago. I haven't still seen that in Germany. So that is something where you have learning curves and technologies. The next bit of opportunity I see is anything where you have frugal platforms like in payments, electronic wallets based on UPI. That is something that hasn't taken off in my country, but that will soon be commoditized, where cost is king and also stability and experience of the system. And I think that is also something where India is particularly a strength. And when I look at future topics like AI and blockchain, there will, like in any Western country, in Germany, we need manpower, we need skilled resources that can relate to us, that are culturally not too different, and that are flexible in mind. So that is something where I foresee a big opportunity for Indian fintechs and startups. And what I would envisage is something like global value chains. When you've got your smartphone in your hand, that is assembled with parts from at least 50 different countries around the globe. And all these parts have to be shipped in containers around the globe. In the digital space, you don't even need that. You have data connections, you have high-speed internet in most countries. And what we should combine is something that is based on what different countries are good at. And that's certainly in my country, deep tech. What we've got is robo-advisory and landing platforms with thought-through algorithms. We have Solaris Bank, banking as a service, platforms that are thought through and manage a lot of complexity. And when you combine that with the more consumer-facing technologies that you've built up learning curves here, we could achieve something like that combination with Credit Tech and PayU, where you have a world-class payment functionality and combine that with a credit functionality from my country. And that is something where there's a huge untapped potential. And that would fit into the wider picture. When you see what's going on the world stage, there are certainly regions of the world that are not so keen on free trade anymore, but that has really kick-started negotiations from the European Union. Just last week I was in Japan at the Slush conference. It's huge talk about the free trade agreement between European Union and Japan, and that also comprises mutual recognition of data protection and privacy regulation. So what the European Union is talking about is we created the biggest safe data transfer area in the world. So you can scale up your fintech, your AI startup between Europe and Japan, and be present in both markets. With India, I think the challenge will still be there, but what this gives you a flavor about is our politicians are open, and as I see the Modi administration at large, I think all big parties in India, your country is very keen on finding new partners to take on the challenge from China and to cover up for what may get lost in North America due to political developments, and also in the connection of Brexit, which also affects you, as I see it, because so far your trade with the United Kingdom and your close relations fall under the free trade agreement between India and fall under the trade agreements between India and the European Union, and that won't be the case post-Brexit anymore, because then you'll just be 2 WTO members, and the same for us. So that is something you should keep in mind. What I still would like to mention is I'm organizing a conference called FinTech Summit AsiaBerlin for the second time this year in May. Last year we had a delegation of over 20 founders and CEOs and also VCs from Shanghai, Hong Kong, Singapore, and also from Delhi and Mumbai. We connected them. We held a one-day conference at the ESMT Business School in the heart of Berlin. That's the old State Council building of Communist East Germany. And we connected them, our delegation, with the ecosystems in Frankfurt, Berlin, Hamburg, and Munich throughout the course of a week. And we go even bigger. We have another one conference on InsurTech in Munich. And we also have other side events with the VC scene in Germany and with corporate Germany in Frankfurt, with the big insurance companies in Munich. Speaking slots and sponsoring opportunities are still available. Ping me on LinkedIn if you're interested, or if you just want to be kept in the loop. Yes, and I would ask, do you have any questions? Yes? Sorry? Yeah. I think take the mic and... Just a sec.
Yeah, better? Yeah, I think you touched upon it a little bit. You were talking about sensitivity around privacy.
Yes.
Are there any instances where European citizens are okay to kind of reduce that sensibility in exchange of certain benefits? Like say in India, if we do have to provide credit to new to credit customers who have no history, and you inform them beforehand that, okay, if you could share your SMS data or you could share your location data of your phone, we will be able to ascertain some sort of creditworthiness for you.
It's in part based on the history of big dictatorships like fascism in my country, communism in Eastern Europe. There's also a lot of populism from the on the political side when people quit their Facebook or Twitter accounts because it's unpopular and people complain about. But what happened with GDPR last year was I think our politicians in the European Parliament, they wanted to hit the big players like Google and Facebook. What did Google and Facebook do? They sent me an email, said, Mr. Trumm, these are our new terms and conditions. If you want to continue using our services, you better agree. And so I agreed, like everybody else did. And the small startup is suffering because they still have to build up the credibility. And so what I foresee is with the right kind of offering, you can still convince consumers. Because what do people also like myself do? When I'm traveling, I have Google Maps, I download that and can navigate in Mumbai, and I connect that to my calendar, also on Gmail. And that gives me benefits. And I'm swapping my data for that. And I think that consumers, they all, when you ask them, would you be willing to give your data away? They say no, but when you make them the right offering, they are prepared to do that. So I don't foresee any insurmountable challenges for that. I think it's the same when I talk to directors from the big banks. They all complain about consumers and say they will never take off and our products are so good. I say, no, maybe your products are too bad, you know. They may be well engineered, but they don't solve any problems and they don't make lives easier. So it's, I think with the right offering and seamless experiences, I think it's pivotal. And some feel of cool and some more intuitive, like your first smartphone. Something, I think that's the biggest challenge. And I think that's where we need more diversity and more collaboration. I think that's where we still need a lot of learnings and influence from Asia.
Is there anybody else who would like to?
Any other?
Okay, I think we're done.
Thank you very
so much.